Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from AmBase's Corporation, a company that seems to be juggling finances like a clown in a circus, but the stakes are much higher than just dropping a ball or two. Get ready for some interesting moves. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for deeper discussions. This is a Form 8K filing, which is basically a corporate breaking news report. The date of the report is June 2, 2025, but the earliest event reported happened earlier, on May 27, 2025. Think of it as a company sharing important news that investors need to know. The main event in this report is about AmBase getting a loan. Specifically, they entered into an agreement for a loan that is a significant one for them. Let's unpack what that means. In May 2025, AmBase Corporation got a loan of $100,000 from their chairman, president, and CEO, Mr. Richard A. Bianco. The interest rate on this loan is 6.5% per year. Basically, they borrowed money from the boss. The loan, officially called a promissory note, has a due date. It's due when the company gets enough money from any source to pay it back. However, there is an exception if the company receives funds from any litigation funding entity to fund any of the 1111 West 57th legal proceedings. That will not trigger the note payback requirement. The final deadline to pay it back is May 31 to have a note payback requirement. The final deadline to pay it back is May 31, 2028. There's also a clause where Mr. Bianco can choose to convert the loan plus interest into a litigation funding agreement, meaning it would be on the same level or pari passu as any other funding agreement they make with an outside litigation funder. It's like saying, hey, instead of paying me back, let's bet this money on our legal battles. You can find the full details of this loan agreement as Exhibit 10IL in this filing. The filing mentions that the company's previous financial reports have raised doubts about its ability to continue as a going concern. This is a financial term that means there's uncertainty about whether the company can stay in business. It's like a yellow flag being waved. AmBase is looking for ways to get money to keep the business running and continue with their legal fight related to a property at 111 West 57th Street. They're exploring different options like getting money from third parties, current shareholders, or even the company's management. They may sell stock, but they have to follow the rules and regulations for selling those stocks or have a valid exemption. The company is open to deals with litigation funders for up to $5 million, meaning the funders provide money for lawsuits in exchange for a cut of any winnings. These deals could cost them significantly, with funders potentially getting their initial investment back, plus a multiple of that amount, plus fees, expenses, interest, and an additional percentage of the total recovery received. The company is also thinking about selling their stake in the 111 West 57th Street property to get some money. If you want more background on the legal battles linked to the 111 West 57th property, you can check out their annual report on Form 10K. This section lists the exhibits included with the report. Exhibit 10.1 is the senior promissory note for $100,000 between Richard A. Bianco and the company. Exhibit 104.1 is just the cover page of this report, formatted in a specific way for computers to read, called inline XBRL. It's for data processing, not really for human consumption. Now, let's zoom out and analyze what's really happening here. AmBase is relying on a loan from its own CEO to keep things afloat, which isn't the most confidence-inspiring sign. The company's pursuit of litigation funding and potential sale of assets suggests they're exploring all available options to stay solvent and fund ongoing legal battles. The big risk here is the company's dependence on litigation outcomes. If they lose their legal fight, they could be in serious trouble. On the other hand, a successful outcome could provide a significant boost. In conclusion, AmBase Corporation is navigating some rough waters. While they are actively seeking funding and considering strategic options, the reliance on a CEO loan and litigation outcomes creates significant uncertainty. It's a high-risk, high-reward situation. Alright, that's our breakdown of AmBase's latest filing. What's your take on these moves and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.